Good morning from wherever you are. I'm Becca Rowland and I'm in the UK here on a wet and cold morning. But welcome back to our webinars. This is the first OAG webinar of 2021 and it's good to be back and good to have so many of you joining us again. With me today on our panel, we've got John Grant, Senior Analyst at OAG as usual, who brings his usual wealth of commentary and experience about the global aviation industry, and will be giving us insights from the OAG data and commenting generally on the industry. And I'm very pleased that we've also got Eddy and Sid from Ishka with us. They bring huge amounts of expertise on aircraft transactions and just experience of research and analysis in the industry. So welcome Eddy and Sid and John.
Hi, thanks. Good morning.
Last time I was hosting this, Deirdre Fulton and myself take turns to host this. It was the day of the US election in November, and today we have the US inauguration. So in some ways it feels like a long time ago, but in many ways in the aviation industry it doesn't feel like a lot has changed, certainly since the last webinar a month or so ago, a bit over a month ago. The industry still is not seeing huge improvement, and we're going to be looking at that as we move into the webinar today and the content. We've taken the title today of Taking Stock, and we want to focus on two particular areas: the vaccine rollout, stocks of vaccine. How is that going to help us get the world moving again and get air travel working again and functioning? Will it? Is it the panacea? Is it the thing that's going to fix everything for us? Or is it just one factor, an enabler that will help, but it's not the answer to everything? So we'll have quite a bit of discussion about that today. And then we're also going to be looking at the airlines and where do they start 2021? What sort of position are they in as we go into the next year? And we'll be looking at, amongst other things, the way that the market has valued airlines as a different way of seeing the value of airlines compared to the usual sort of capacity that we look at. But we will be starting, as usual, looking at frequency and capacity and all the good OAG data that we bring to this webinar each time. So let's make a start. John, we always start with you and comment on this OAG data. This is capacity data currently. We've taken a slightly different look. If you're used to what we've been presenting in the past over the last 10 months, we've mixed up months and weeks, but for the moment we're going to separate months. We've got a rolling 12 months here, so up to January, and we've got a rolling 8 weeks in the bottom right hand corner of the slide. So our most up-to-date number of where capacity is compared to a year ago is that figure of 18th of January for the global figure of minus 47%. Still not great, is it, John?
No. Hi. Happy New Year to everyone. If you think this is happy.
Yeah, I missed that bit.
Yes, it's not looking good, is it? It's if anything, moving backwards. We've all seen, heard, been impacted in various ways by the events of the last 3 or 4 weeks, and airlines, particularly in Western Europe and increasingly in North America and other parts of the world, are cutting capacity back. We're at 55 million seats, scheduled seats a week at the moment. We got close to 60 million in the week before Christmas, which seems a bit like a present at this moment in time. And if you look forward for the next 2 to 3 months, the situation looks pretty grim, but we've got to keep this in context, Becca. This is not a surprise, or should not be a surprise to anyone. This is what we expected to see in the first quarter of this year, and indeed into the second quarter of the year. And it really is a year of 2 halves, and until we get to see some significant developments on vaccines, travel passports, consistent application of entry processes and requirements, it's likely to stay pretty close to that minus 47% globally And in Europe, you know, we're now at just 26% of the capacity that we saw this time last year. And this is ironically the week that we started tracking COVID-19 in any great detail. And, you know, we're no further forward.
It's sobering, isn't it? And I guess, you know, we've got on the one hand, you know, really demand just not coming back because of all the travel restrictions, and the airlines now, as you say, with a year nearly of grappling with this, not in a position to take any risks, are they, with bringing capacity back where they can't make money. It's all about cost preservation, or, you know, keeping costs under control as we continue to move through the winter and through the spring.
Yeah, it's, you know, it is about cost mitigation for the next quarter. And of course, these numbers here are stark in themselves, but this is not actual demand and the number of people who are flying. So, you know, we can, if we see this amount of capacity out of the market, from what we've seen in 2020 in the second half of the year, average load factors were probably 20 to 30% below their normal points. And that means that demand for this first quarter is going to be extremely soft. And many airlines have taken pragmatic decisions just to stop services until the end of March. Carriers like Jet2, you know, a major UK leisure airline, just essentially closing the doors for 2.5 months. Ryanair cutting 92% of their capacity. You know, it's pretty grim out there.
One of the observations we've had as we've talked amongst ourselves about the data is, you know, at the moment we're still, these percentages are still looking back versus versus a year ago, and as we move forward, that's going to feel increasingly meaningless because, you know, a year ago the demand fell off a cliff. By looking at data in this way, are we encouraging people just to look backwards and sort of wish for when things return to normal, and actually really we have to be thinking about the world in a completely different way? You know, we have to, airlines, airports, tourism bodies, they have to start from where we are today and not be looking back and sort of hoping one day we're going to be back to 2019 levels.
No, absolutely. There is, this is not a light switch solution. You know, you can't come back tomorrow, excuse me, and the numbers will have changed. It is going to be a very slow recovery. It's going to be a very bumpy road. There will be ups and downs, and, you know, airlines have got to carefully manage their way out of this, along with tourism boards and other stakeholders in the travel ecosystem. This is not an overnight recovery. In fact, we've been saying for some time 2024 perhaps is the moment we could get back to 2019 demand levels. That could well stretch into 2025, the way the first half of this year looks like it's going to shape out, because if there's no confidence in a strong recovery by June and July, airlines will be taking a very cautious approach to next winter and the capacity they put back into the market.
Yeah. Okay, we're beginning to get questions coming in. Do send your questions in through the chat feature. We'll try and answer as many as we can as we go through the webinar, and if we can, we'll have a little time at the end for for any other questions. One of the questions we've already had is about individual countries. What about Russia? Well, I'm afraid we don't have Russia on this table, but do contact OAG for data on Russia if you'd like that. This shows the global figure again, plus a number of countries across different geographic regions. So China's the standout one, isn't it, John? And all last year we were talking about how positive China was relative to everywhere else. But we've seen some real softening here, haven't we?
We have, and this really, I think, more than anything, is a stark reflection of how difficult it is for everyone, airlines, governments, and travelers at this moment in time. So in China, you know, clamping down on on outbreaks of COVID-19 has resulted in capacity coming out quite dramatically. We know the Chinese government is being very stringent when they see an outbreak, and they're just stopping air services overnight. But the frustrating thing here, of course, is that we're 3 weeks away from Chinese New Year, which is traditionally a very strong period for the Chinese airlines and Chinese domestic capacity and travel. And we suspect that it's not going to be as strong. The authorities are already closing down and beginning to remind people that it's not really necessary to travel. So that's a concern there, when one of the beacons of hope is actually moving backwards. But the three that stick out for me, Becca, are Germany, Singapore, and the United Kingdom, which, you know, traditionally are three extremely large, extremely strong aviation markets, and all three of them are running at less than 20% of the capacity they had this time last year.
Yeah.
They are standout countries and markets for all of the wrong reasons. And in the case of Singapore, if you look all the way back throughout COVID-19, less than 10% of capacity has been operated. And the impact, not just on the airlines and on Changi Airport, but of course on the economy and tourism, has been just devastating. So it's frustrating. But the trend in so many of those countries is a consistent reduction in capacity. You know, you look at France, it was at 59%, minus 59%. It's now at minus 65. You look at South Africa, minus 48 in the week of the 4th of January. It's now at minus 56. So it's a consistent pattern around the world, and we're not including any Latin American markets here, and you know, they're going in exactly the same direction as well.
Yeah, I wanted to bring Sid in here. Sid, you, well, when we were speaking yesterday, you were saying that there's a mixed picture in China when we look at specific airlines. That's, I think, Spring Airlines in particular, we need to single out and say there's a slightly different story there.
True, true. So I mean, as John mentioned, the recent kind of traffic data which was published by some of the large carriers, there's clearly been a month-on-month decline in terms of domestic traffic, but airlines which are purely focused on kind of domestic market, even kind of pre-pandemic, and especially LCC like Spring, that's just the trends that the airline has demonstrated. That's been very encouraging, and it just shows the potential of that particular segment in the country, and the implications of this crisis on the market overall. So I thought that Spring's performance kind of stood out amidst all of this. But yeah, right now, kind of with the overall market concerns with these new cases and restrictions, it remains to be seen how some of the coming weeks and months play out.
I think it's just interesting, isn't it? As with every difficult period, it does point to the fact that there are still opportunities for some airlines in there, and I think we'll be looking at that in a little bit more later on. John, you were pointing out how over the last few weeks capacity has the situation's worsened. Our next slide looks at this data in a slightly different way, and we've shown slides like this before, where we take a snapshot of what the capacity situation is at various points in time. So that yellow line you see is the capacity going forward to the end of March as we see it now, and the other lines are 2 weeks apart going back into the past. So we see between this lighter grey line and the yellow line, that shows effectively that the airlines have taken out nearly 60 million seats over the last 2 weeks. That's still quite a lot, isn't it? This is a lot of, you know, we're still seeing this last minute, effectively, reductions in capacity, aren't we? The airlines are still only planning a few weeks ahead in some ways.
Yeah. In most cases, probably no more than 2 to 3 weeks, and you know, they're playing a bit of catch up from the seasonal holidays and the New Year impact. But if you look to the end of March and you see where we are at the moment, and where, you know, we are at about 55 million, then I don't think there is anyone who expects anything to change significantly around the globe that is going to see an improvement in capacity or demand before the end of March. So consequentially, that sort of 75, 80 million number that we see for the weeks of the 22nd of March and the 15th of March has got to come down, and it's going to come down to around the 55, perhaps optimistically 60 million mark. So all of that cumulative capacity over the next few months is going to be somewhere in the region of 250, 300 million seats, I think, that will comfortably be removed from major markets. And you know, that when we were here in November and December, the US carriers were being slightly bullish and more optimistic about the first quarter. And I think some of that sentiment has gone away. And talking to some of our colleagues and clients in Canada last night, you know, they were saying it looks like it's going to get worse there in the next couple of weeks. And that's probably the same story in most major markets. So it's a very, very difficult time for the airlines. And they are on every day going to be sending more and more schedule changes to OAG.
Yeah, yeah. Okay, let's move on and look at the vaccine and what that offers in terms of hope for the industry. This is a chart that's come from Our World in Data, and it's available in a few places, I believe. Just looking at the rollout of the COVID-19 vaccines in different countries. So obviously, some countries are getting it to their population pretty quickly, others are slower. There are some countries that were late to the party, I guess, in terms of ordering doses. As I heard on an Ishka webinar yesterday about the vaccine rollout, at this point in time, there isn't enough going around altogether. So at this point, you know, there isn't enough vaccine for everyone to get it. So what difference do we see this making to travel, or is it just too early to say?
I think it's too early. You know, the vaccine, of course, for everyone is extremely welcome, and there's been lots of discussions and commentary about who's going to get the vaccine first and what will that mean in terms of travel. Clearly, you know, Israel is way ahead of everyone else in terms of vaccinations, and unfortunately, you know, it's way ahead, but it doesn't have an extremely high propensity to fly as a country. So it's great for the country, but it's not probably going to have much of an impact on tourism. Similarly for the United Arab Emirates as well. So it's until we get some of those very mature, developed Western markets, such as Germany, United Kingdom, United States, we get sufficient levels of vaccination into the community, will we begin to see some change in travel intent and travel behavior. But the important thing, I think, Becca, is not just the vaccine. This is a multifaceted solution that includes those travel passports. It includes rebuilding confidence amongst travelers and communities, and putting secure and safe processes in place that are consistently applied around the world rather than unilateral actions. So this is just one part of a full suite of solutions that have got to be applied.
I think it does show, though, doesn't it? You know, it's going to take, the vaccine itself is just going to take a long time to roll out, isn't it?
Absolutely. And, you know, if we waited, well, we'll see some slides later. I mean, it's all very well rolling the vaccine out, but you've got to understand whether a particular community or a particular country has a willingness to accept the vaccine. And there are some countries that perhaps are not as well attuned to vaccines generally, and perhaps will not be as willing. So
yeah, we've got a slide on that, which we've taken from the Ishka presentation yesterday. This was a survey that was done in December, with looking at willingness to take the vaccine. And you know, I guess for us in the industry, we can look to this as you say, one part of the sort of solution to get everybody moving again. But you know, the thought that some of these very, you know, large countries, Nigeria, France, very high proportions of people very hesitant about even taking a vaccine, you know, it's sort of disappointing to me, really, because I want to see the industry getting over this. But we have to be aware that this is going on in the background.
And you know, to my mind, it's quite scary. We look at some quite sophisticated and you know, without decrying anything, very well educated country markets such as Germany and the United States, where around 1/3 of people surveyed were suggesting that they probably will not, or definitely would not, be taking a vaccine. And you know, these are markets from which we see lots of outbound travel every year. So it's a very patchy response. And if this is reflected in, you know, the amount of travel, then it just completely states the need for a travel passport that has a linkage to having been vaccinated. And I know that then becomes a personal choice for everyone whether they wish to travel internationally, and therefore probably will have to have a vaccine.
Yeah, we're getting questions.
So I was going to say, I think that's one of the issues. I think the whole situation has with COVID and the pandemic is quite how fragmented the response has been from all the countries. It's not a uniform response. It's been quite disjointed. And again, this table shows you that even within countries, you know, there are different approaches which make, you know, having a uniform solution all the more difficult.
Absolutely, yeah. Absolutely. Okay, at the after the last webinar in December that OAG ran, we sent a survey to webinar participants and to various customers and other contacts, just to try and gauge the industry sentiment at the end of the year. So, and some of those questions were about the vaccine. So we've added some of the results of that survey in here. So thank you, any of you who are listening today who took part in that. Your responses are included in here. No surprises here. These are a couple of questions about vaccines. Will the vaccines get people flying again? And I think at this point in time, when we sent this out, I'm not sure that any vaccines had actually been approved. So it was, you know, we're in a month or 6 weeks on, we're in a little bit of a different position. And the second question was, vaccinations will reach those with the highest propensity to fly. On that first question, clearly no consensus really about whether they would get people flying. Some people not at all optimistic, some extremely optimistic, but you know, a good cluster of people somewhere in the middle. So I think that confirms what we're saying today, that it's not a panacea, it's not the one solution. And in terms of the vaccinations reaching those with the highest propensity to fly, a tendency from this group who responded to say no, it won't. And we know that in many countries, certainly in the UK here, the vaccine's going to the most vulnerable and the oldest first. There are countries that are taking a different approach. Indonesia is rolling out the vaccine to younger working people first, on the basis that they're the ones that are out mixing in society, and by vaccinating them, they'll protect the people in there who are more vulnerable in their households. So, John, Eddie, any thoughts on this, or is it just what we see?
You know, I think it's really fascinating, because in the bleakest weeks of 2020, when we were being asked which market segments are going to recover the earliest and who's going to fly quickest, we were saying, you know, it's definitely going to be Generation Z and young people who are not as likely to be infected and have perhaps a more carefree attitude anyway, and that some more mature demographic profiles would be bunkering down. But in the last couple of months, I think there's been almost a flip of that, where people who are slightly more mature are
people like yourself, John.
Well, you know, I've avoided saying like yourself, Becca, because I didn't want to, but thank you for raising that. But there is the vaccine has created this sort of community who, quite frankly, are now thinking about doing bucket trips and doing the trip of a lifetime that they've always wanted to do since they've been locked down for the last 9-10 months. So it's quite interesting that this vaccination is leading to some changes in potential recovery strategies and options for tourism boards and stakeholders who perhaps were not thinking of targeting the higher disposable income spender, but more backpackers. So I think it's fascinating. But you know, the whole thing here is nothing is going to change or materially change the first half of the year. The vaccine is just getting people fit and able to travel, I think, in the second half of 2021.
Yeah, good point. Okay, we've got another couple of responses charted here from the survey. So if we think the vaccine isn't the thing that's going to fix everything, but it's sort of enabler. We asked, will governments rapidly relax international restrictions on air travel when they start rolling out the vaccination programs? Again, not really a sense that that would happen. And then we also asked about, will countries work fast to develop an international passport? So as I said, we're getting some questions in about that. It's an interesting idea, isn't it? I was reading the other day about the Vaccination Credential Initiative, which is, you know, it started with the Commons Project, and Microsoft and Oracle and the Mayo Clinic and others have come on board with that. I think there's other initiatives around as well. Do any of our panel have a sense of whether those are going to work? How do we make those happen? Are governments behind these?
They've got to work. It's pretty simple. I mean, the UAE and IATA are doing a test now of their travel pass program, which I think started yesterday or perhaps on Monday. So I think we've just got to stoically accept that if you want to travel internationally, you're going to have some sort of validation certificate, and you're probably going to have to do a test 72 hours before you fly, and perhaps even after you've arrived. It's another burden in the travel booking process, but if it means we can travel, and more importantly that we can kickstart tourism and economic recovery, I think it's just one of those things we have to live with.
Yeah, I think one of the things still need to bear in mind, I think, is, you know, if you've got a travel pass and you've got a stamp in your book that says you've had the vaccine, we still don't really know whether that vaccine's valid for 6 months, 9 months, 12 months, or whatever, and therefore, you know, there's still a lot to be learned, I think, in the process.
Yeah, good point, Eddy. John, we've had whole webinars where we've talked about travel bubbles and corridors and all sorts of other terms that have arisen, and really concluded they've not been very effective through 2020. Are we going to see, is this where bubbles could come into their own, where you've got two countries with high levels of vaccination where they say, okay, the risk is lower now and we can create a corridor that works? You know, I know with, you know, is it Singapore, Hong Kong, they keep announcing it will open and then it doesn't. These travel corridors have been much harder to implement, it seems, than anybody would hope for.
They have, people have expanded huge amounts of energy on something that has delivered little, if any, traffic during 2020. It is just so difficult to put these in place. The logistics, the mingling of people in environments such as airports and other such locations means that you really can't make a completely secure bubble or corridor, and it's not addressing the real issue, and it's certainly for the major hub carriers is not a solution. You know, you just think about the airlines in the Middle East who rely on perhaps 80% of their business is connecting traffic between different points. Creating those bubbles becomes almost impossible for them. So bubbles, corridors immediately begin to tell you that it's just about regional flying. And Becca, every time we've nearly got one in place, something can change. You know, I'm sure the UK government thinks it's really amusing to give people 8 hours notice to get back from South America to the United Kingdom at 4 o'clock on a Thursday afternoon. I mean, it just
doesn't really work, does it?
No, it doesn't work.
Yeah, and those sort of things are exactly the ones that are going to make people more nervous about traveling long haul. If the rules change while you're a long way from home, you know, you're not going to take the chance in the first place, are you, of going somewhere where you're going to be stuck for potentially months?
No.
So we've got a few more slides with some of these survey results, which are really just ways to start conversations about what's happening in the industry. And John touched on the type of people who are traveling, and we had some questions about that. To what extent do you think there's pent-up demand for air travel? Do you expect a proportion of business travel to not come back? And thinking about leisure travel in 2021, will it be those younger, more people prepared to take more risks, or will it be older travellers who come back first? So some interesting results here, aren't there, John? But I think a real sense with business travel that there is a portion that's not going to come back, isn't there?
Absolutely, and you know, as you say there, Becca, there are some fairly major corporates that have already said that they're not going to be approving travel to the extent that we've seen prior to COVID-19. I think the other thing we need to be careful of is, you know, there is undoubtedly pent-up demand, but let's not shoot ourselves in the foot. I mean, you know, EasyJet Holidays or EasyJet, Johan Lundgren, their CEO, came out on Monday and said that EasyJet holiday bookings for summer 2021 are up 250%. Wowee. But you know, he didn't tell us what the base number was from which the 250% growth had occurred. So I think we need to be a bit more open. If we're going to say things like that, we should at least say, you know, we've got X amount of bookings compared to what we had this time last year. But there is undoubted leisure demand out there that is already booking, and there have been some really aggressive marketing campaigns by low-cost carriers throughout Europe and other parts of the world, seeking to get people to put their cash into a ticket for sort of July, August, September, the second half of the year holiday season.
And going back to the business travel, which is one of the things I'm particularly interested in, that particularly hurts the airlines, though, doesn't it? The disproportionate amount of their revenue has traditionally, certainly for the legacy carriers, for the big network carriers, long haul carriers, it's come from business travel, hasn't it? And the loss of that traffic is something they have to take into account going forward, you know, over the long term. Is it, how do you change your networks? Do you make them more leisure orientated? Where do you fly, and so on?
Yeah, but you know, not just the legacy carriers, you know, the low cost airlines. I mean, Nestle, for example, close to where I am, they probably put 30% of the passenger load on the first flight from Gatwick to Geneva, and between their 2 European corporate offices, and that's probably not going to be 30% going forward. So low-cost airlines are going to see this impact from business travel as well. You know, the road warrior in the United States who was using Southwest, for instance, may not be doing as many trips as he did in the past. And we see it in the legacy carriers, many of whom have already started to reduce their business class cabins from 80 seats to perhaps 40 and 48, and an interesting development which was going to happen anyway, but I think will be very interesting in the recovery, is the growth in premium economy demand and airlines with premium economy products. I can certainly see, you know, we've seen Emirates announce their new premium economy, but there is going to be a lot of demand for that economy product with a bit more space and a bit more social distancing. So that will be fascinating to see how that plays out.
Yeah, very, very interesting. Let's move on. We've still got quite a few slides to go through, and I'm keen that we bring Eddy and Ishka in, Eddy and Sid in a bit more. But we've got one more on the survey. We asked, everybody always wants to know when are we going to be back where we were. So we asked questions about where do people think capacity would be relative to 2019 in 6 months, in 12 months, in 24 months. So we see here 72% think that in a year we would actually no, sorry, I've got that the wrong way around. Majority think capacity will still only be 72% of the 2019 level in 12 months time. That was the average figure. So I think that just confirms, doesn't it, what you're saying, John? This is going to take quite a while to get back, and even in 2 years time we won't be back where we were in 2019. We also asked about what people thought were the big industry challenges, and we gave them 6 different statements and said, well, did they think they were not at all challenging, or were they extremely challenging? And perhaps not surprisingly, the ones that came out with the highest score were the continued uncertainty about travel restrictions, had the most sense that was extremely challenging or very challenging, and international agreement about how to identify passengers who are safe to fly. I think we had a question on one of those items now. Timothy O'Neill Dunn, who I think has asked questions before with us. Welcome back, Timothy. Would the adoption of a Canadian system of publishing COVID cases on airliners give people more trust in the system rather than the denial of the possible instance of COVID positive cases on board? Do you think a bit more transparency about people travelling with COVID?
Yeah, I think so. It's hi Timothy, Happy New Year. It's interesting, isn't it? Because there is so much transparency and so much survey and research work and ratings and rankings for airlines that this just seems a natural extension of that. And you know, airlines have got nothing to hide. It's just being transparent, and I think that would create more confidence. And of course, that's what we need more than anything else.
Okay, let's move on and take a look at where the airlines are now as we start the 2021. No doubt there's a tough year ahead. Continued cash burn through the year, debt servicing costs, which are going to be pretty high. We saw Delta come in with one of the first of the Q4 results this last week. Sid, I think you were saying to me that this figure of 755 million loss for the fourth quarter isn't perhaps as bad as it seems. There's a glimmer of hope in there, is there? Seems like a very large number to me.
Yeah, no, you're right. I mean, it's obviously, I mean, if you look at the full year number, that's even more alarming. But the story, I feel, especially with Delta and I guess many of the North American airlines, is the steps that they've taken since the start of the crisis. So Delta has been able to reduce its cash burn by 90% compared to when the crisis first emerged. Now, for an airline the size of Delta, that's quite a big achievement. And the amount of cash they've raised by themselves, and they've been one of the kind of fortunate ones within the airline industry, in the sense that the support that the US airlines have got from the government has been quite extraordinary. So a combination of all these factors has helped them to adjust their cost base significantly. Obviously, it's because it's a premium airline. It depends a lot on international travel as well, and because that part of the segment is still missing, losses have continued. But the takeaway also is that they've managed to reduce that outflow. The amount of cash that's burning, that's come down, and I think they're probably expecting a break even or returning to cash positive by April or spring this year, which again it depends on a lot of factors, and previously they had hoped to return to cash positive by end of this 2020. So yeah, there are a lot of uncertainties with that, but with the amount of liquidity these airlines have built up over the course of 2020, I think the risk levels, especially with some of these kind of legacy carriers in the US, especially in case of Delta. I think that has certainly gone down.
It's really interesting, isn't it? Because in some ways we talk about the low-cost carriers potentially coming, in general, coming out of this better. They're perhaps better positioned in terms of serving leisure markets, shorter haul markets. They started off with a bit more cash. But for a carrier like Delta to, if what you say, you know, the idea of being cash neutral, you know, within a few months is quite remarkable for an airline that size. And obviously part of that is about furloughing staff, I assume, is it? I know this week we've seen Thai Air Asia say they're going to furlough 75% of staff. And
yeah, I mean, in case of Thai Air Asia, again, some of the recent developments in the country with respect to the pandemic, that's concerning, and obviously this is a large number, and so going from, I mean, a lot of these airlines are reliant on their domestic market, and we've seen an increase in restrictions in Thailand, which has led to a significant drop in forward bookings in that particular market. So that's why kind of this initiative and the government support, as we'll talk about in subsequent slides, hasn't been consistent. So
right.
that's the implication.
Right. So just summing up, I mean, says at the top, tough year ahead. We are seeing new travel restrictions coming in place all the time, or some lifted and then some reimposed. And we're seeing in Australia that they're now talking about potential international lockdown through to 2021, which certainly makes resuming travel very difficult. I mean, for places like Australia, where there is at least a domestic market, it's a bit easier, isn't it? So let's move on. We thought we'd take a look at a few individual airlines. I've taken a selection of 4 here from different parts of the world for the larger airlines, just looking at capacity that they're showing in their schedules now. Again, that same sort of color coding system we had before. Yellow is the current week, the latest data, and then the grey line is what we saw they operated as capacity last year, and the black line 2 years ago. So to John's point, I think really you said earlier, John, that you would expect this capacity from mid-February that we're still seeing in the schedule to come out. And I think when we look at this at an airline level for Delta, for British Airways, that definitely looks like the case, doesn't it?
Yeah, it does. And, you know, to the point Sid was making, Delta have been very prudent and managed their way through this very well. And that is not going to mean that on the 22nd of February they're going to have a party and they're going to put back in another 1 million seats that are going to fly around empty. So that capacity you see there is definitely going to be shaved down. And similarly, I think for all of those carriers, we can expect to see a lot of capacity coming out. It's strange. Some of the behaviour of some of the airlines is a bit odd. Last week, and we've seen this before, when in the United Kingdom, when EasyJet and Ryanair and Jet2 are cancelling all their flights and reducing capacity dramatically, British Airways were putting some more seats into the market. So they're either sniffing a different set of measurements and market sentiments than the rest of the world, but that will be coming down as well. And Emirates, it's only a small part of their network, but they've dropped all services to Australia for operational reasons in the last week. So we'll see some capacity coming out of there. We've seen some capacity coming out of the United Kingdom in the last week as well. So these are sadly all likely to see capacity being cut in the next 6 weeks. Right.
Thanks very much, John. So we talked a lot about capacity in these webinars and tracked that, but it'd be easy to think that airlines that drop a lot of capacity that's somehow worse the ones that keep the capacity. Obviously, there's just much more complexity than that. So we took a look at where the share prices were for a number of airlines at the beginning of last year and then at the end of the year. So 6th of January and then again the 31st of December. And just index one over the other to see where there've been rises and where there've been drops. So slightly different way of looking at the data. And I apologise, we're missing a legend here. The green is the low-cost carriers and the orange is the legacy carriers. We can see more of these green low-cost carriers up in the sort of area where the share price rose over the course of a year. I guess that's not surprising, is it? I don't know, Eddie, do you want to comment on that?
No, that's, that reflects the fact that they're much leaner, they're much sharper, they're more ruthless in their capacity management. In a recovery phase, they're going to be able to stimulate demand probably quicker than legacy carriers. And they generally are in domestic or at the very worst regional markets. So they're not exposed to complex networks, hubs, spokes, and very large aircraft types. So they're able to do all the things you would want to do in a recovery and do them well, Becca.
So no surprises there, really.
Not at all. I mean, when you think about Ryanair and their stock price is up, and yet they're only flying about 10% of their capacity, it tells you that the analysts still believe that it's a good stock and that it's been well managed, or as well managed as you could do through this crisis from a financial perspective.
Yeah, which is at the end of the day what matters to many people.
Yeah, it's also a forward-looking picture in terms of the stock price. So they're obviously anticipating that those kind of carriers are the ones that are going to respond, more positively going forwards.
Absolutely. And some of them are smaller, some of them they've just got more flexibility, haven't they?
Mm-hmm.
So government support, we've talked about that a lot over the last year. A very mixed picture, isn't it? So are we going to see more support, another tranche of support coming, Eddie?
I think so, yeah. I mean, I think it was mentioned earlier, there's been about 161 billion in government bailouts so far. I think about 156 carriers have asked for it from 96 countries. So, it's a global perspective, and more recently, it's been from Bolivia to China, from Egypt to Tahiti. Governments have stepped up. And I think with a lot of this support, it takes the airlines to the end of March, after which I guess the governments are hoping the vaccine will start to play its part. There's still another about 15 billion in negotiation as we speak. I think that the US payroll support program came good towards the end of the year as well, with another 15 billion. So, that kind of support's been ongoing. A lot of it has been in the form of equity injections, which again has helped support, the airlines and their stocks. A lot of it has been loan guarantees, and that's probably where, some of the airlines are going to have a challenge going forwards, because of course, being a loan, it has to be paid back at some point. And there have been various subsidies as well, where that's been necessary. So that support has been ongoing. I think IATA have said that, there's about another 80 billion might be required this year. But as John said earlier, we see this as a year of two halves, and I think we are of the same view. So that support is going to be needed to get us through this, certainly this first quarter for the airlines. But then beyond that, I think there's an increasing reliance on the vaccine playing its part.
It's really interesting, and thank you very much, Eddie, for sharing this particular slide. So this is information that you at Ishka track all the time, isn't it?
It is, yeah. And as you can see, we mentioned, it's a fairly disjointed approach to the whole thing, and it's the same with the government bailouts. Some have been a bit more proactive than others, whether it's just been state aid or whether it's been loans or guarantees or equity injections. There's a whole variety of options that the governments have adopted.
Right, and so we're going to move on to more information. We've shown a slide like this before from yourselves at Ishka. Always gets lots of questions. Really, really interesting. People are always interested to know, well, you know, how are airlines doing? Which ones are in trouble? Which ones are not? There's some good news stories in here in this latest update, isn't there? Or not good news stories, but some airlines that you have moved out of the high risk into more moderate risk areas.
Yeah. There's both kind of positive and negative kind of performance aspect over the course of last year. So yeah, I mean, we saw several of Asia Pacific airlines actually returning to profitability even at an operating level in either Q2 and Q3, and that was helped to a great extent by their cargo businesses, and in some cases their large domestic markets. So yeah, there have been some positives in that sense. The likes of Cathay, who initially kind of because of their reliance on international traffic and the year they had in 2019, the risk levels had heightened, but shareholder and government support came through, which has kind of for the time being reduced the risk levels, financial risk levels from their perspective slightly compared to the middle of last year. And elsewhere in other markets as well, the likes of Volaris, the Mexican market is, we talked about China, but some of the other emerging markets have also seen some encouraging recovery, and Volaris has kind of capitalized on that very well. So there's been some positive moment with that as well. But conversely, I mean, as we look at this picture heading into 2021, this it is as you pointed out, it is going to be a challenging market, and with pressure, with already balance sheets damaged quite a bit from the losses last year, and the demand kind of being uncertain and uneven, with the recovery as well being very start-stop. Airlines will have their work cut out in terms of just managing their operations. So yeah, there are still plenty of airlines which kind of remain in the onward zone, and there's some developments going on. If you look at Malaysia or Thai, these airlines which are restructuring and talking with the creditors, it is a long process. So yeah, we are keeping an eye on what happens there. But yeah, that's the situation as we head into this year.
Thanks very much, Sid. And I'm, as somebody who's worked in the past many years ago now for a couple of big American airlines, I'm very aware that, you know, the big successful American carriers have all been through restructuring programs in the past and come out to become quite profitable airlines. So the fact that some of these airlines in this red box are going through restructuring, you know, it's good that there's restructuring processes taking place, and you know, we have yet to see where that ends up, but airlines do come out and can thrive, can't they?
Yeah. So I mean,
Becky, sorry, Sid, I think you're right. I think equally, you know, we shouldn't forget that there were many airlines that had either overstretched their natural markets or had been far too ambitious in their aspirations. And pre-COVID-19, there was a bubble developing that was going to have to burst at some point for some of these carriers. And you know, when you look at the Ishka analysis in the top right-hand box, many of the carriers who you would think were either overstretching themselves or had missed the market or had suffered from poor management are in that box. And quite frankly, in the normal process of evolution of the airline industry, some of those would probably have either restructured or collapsed anyway. So it's inevitable that some of those will disappear. We've said how many times SAA have been recovered and saved, and you know, papal intervention on Alitalia has occurred so many times. It's incredible.
Okay, we've got a couple more slides left. I'd really like to get to the slides about that Ishka provide us with some aircraft value data. So if you don't mind, we'll move on to those. But you know, if you've got more to say, then do say on that.
Yeah.
Eddy, Sid, aircraft values in 2020. These are really interesting slides to see.
Yeah, well, I mean, aircraft values don't tend to move too often. They go with the cycle, but when you have a cycle like this, you tend to see a lot more regular and more dramatic movements. These charts just show you how we saw the values on the left-hand side for narrow body and regional jet aircraft, and on the right-hand side for wide body aircraft, and how they progressed over the course of 2020. And you'll see that it's a fairly slippery downward slope. And I mean, at the start of the year, I mean, the markets were already a little bit, had been a bit frothy. They were a little bit down. There was a bit of overcapacity in the market, but when March hit and the pandemic took force, we saw a dramatic decline in values just because of the overcapacity supply. You know, there was all the aircraft were being parked up, and it became fairly apparent that they wouldn't all be needed for the coming or the foreseeable future, and therefore that had an impact on values. And there was a slight lull during the course of the year. Everyone was hoping for a better summer or quarter 2, quarter 3 than we did have. So quarter 3 disappointed, and so the values stepped down a little again. And of course, as we've talked about earlier today, you know, quarter 4 and quarter 1 now isn't living up to hopes, and so those values are still slightly declining. You know, we've come down in values terms, maybe 15 to 40% from the peak, depending on the type. I mean, these are 10-year-old aircraft. For younger aircraft, it's not been quite so dramatic because they're still quite liquid and desirable machines, and obviously they're part of the future. For older aircraft than 10 years, it's maybe been even more dramatic because a lot of those aircraft are aircraft that won't be coming back into service. So there's been a lot of differences there, but you know, airlines, they've been selling aircraft in order to raise their liquidity and capital, but obviously for older aircraft, they'd be getting less now than they would have done, say, a year ago. But it's, you know, these things have, these are double-edged swords, because, you know, if it's a challenge if you already own the aircraft, but if you're looking to refleet, this is an opportunity in which you can do that. Maybe release an older fleet that you have and acquire some younger aircraft at more attractive prices. So we're expecting that trading aspect of the aircraft market to improve. On the next slide, sorry.
Shows there's always opportunities, aren't there? You know,
there are,
and we're seeing a number of airlines apply for AOCs, and you know, there will be new startups looking to acquire aircraft, and you know, lower costs is always good.
Eddy, do you know,
the next slide is the lease view, isn't it?
Yeah, the lease view. I mean, leases tend to respond more accurately, I guess, in terms of where the market is. So a lot of lease rates came down, obviously, because leasing is a major part of the market. Depending on the aircraft type, it could account for 40 or 50% of an aircraft type's ownership. So leases responded much more aggressively and quickly. Again, airlines, if they haven't got the passengers, they haven't got the revenues, and therefore it's going to be tough for them to pay rentals on aircraft. And so they've gone through a phase of negotiating, I guess, with a lot of their lessors, in terms of there've been a lot of deferrals last year. I think some of the compromises that the leasing companies have made have been, you know, they can accept a lower rental in the near term, but if the airline subscribes to a lease extension, certainly on a type that they want to keep and fly for longer, then they'll do a lease extension and rejig the finances that way. And we've seen a lot of what they call power by the hour deals as well recently, where the airlines are paying for just for the hourly use of the aircraft rather than a fixed rent. A lot of these are short-term, near-term solutions, interim, with the expectation, obviously, that passengers come back and the airlines can start to make those incomes again. But again, you know, with these lower lease rates, it's an opportunity for I mean, we've seen a lot of startups coming into the market now. And there are some good business plans out there for some of these airlines. Again, they are approaching the market with a clean balance sheet, or in terms of there's no legacy loans or debts on board, and if they've got the right business plan, they can step in. And we've seen carriers in the past, like the Ryanairs and the Wizzes, who've taken advantage of a market like this and grown dramatically. So perhaps we can expect to see another carrier appearing that's going to take advantage of this kind of situation.
Very interesting, isn't it? Very interesting. We are just at our hour, so I think I'm going to have to wrap it up there. We had one more slide, but I think we'll miss that. Thank you very much, Eddy and Sid and John, for all your comments and for your input and contributions to the slides. We have answered quite a few of your questions as we've gone through. You may not have been aware of it, but we've tried to answer quite a few. Thank you for joining us today. We will be back on February the 17th for the next webinar. I think we're going to be looking at China in particular, but watch this space in terms of what the topic will be. I just want to say thank you once again, Eddy, Sid, John, thank you for joining us.
Pleasure.
Thank you.
And thanks,
Pleasure.
thanks everybody who's come on the webinar today. Do stay informed with OAG's data, sign up to the blog. John is now taking part in podcasts regularly, so if you'd like, do sign up to the podcasts from OAG, and you can listen to more of the insights from John. And I believe details of that have been in the chat or will be in the chat, or you can contact OAG for that. Thank you very much once again, and have a good day.
Yeah, thank you.